Yeah.
whether you like it or not, Bitcoin is coming, and whether you accept it or not, it's still coming. Like it's just going to be in everything you have. Like if there are UST bills with Bitcoin in them, like the Bitbond, then it's just everywhere. It's ubiquitous at that point, and it's not about whether you want to put 1% in or not. You just have 1% exposure, and there's already precedent with this. A number of pension funds around the world have Bitcoin exposure in some form or fashion. Like the largest Korean pension fund, I think, has a MicroStrategy. So it's not direct, it's MicroStrategy, but MicroStrategy has a lot of Bitcoin.
Yeah.
And this is just a trend that we're going to keep seeing. But it is that Overton window shift. It's becoming that Bitcoin is an acceptable thing to be talked about as a reserve asset. So my prediction was this year or next year, we can go to 1 million. Maybe you have a 50% drawdown, right? From 1 million to 500K.
Yes.
According to Samson Mow, Bitcoin is now a strategic reserve currency in the making, rather than merely an experiment or niche asset. Mow thinks Bitcoin is the only practical way out of the debt-ridden governments and the increasingly unstable monetary systems. This cycle is being driven by institutional demand, geopolitical urgency, and a worldwide realization of Bitcoin's fundamental value proposition, in contrast to previous cycles that were propelled by hype and speculation. Although market manipulation and price suppression may have obscured Bitcoin's true momentum, Samson claims that the dam is now cracking. The conditions are in place for what he refers to as the mother of all Bitcoin bull runs, with $1 million becoming a reality rather than a pipe dream. Remember to click the subscribe button and enable notifications to ensure that you never miss our most recent analysis. Thank you, and enjoy the video.
The thing you have to really understand is the composition of the hodlers of Bitcoin is totally different today than it was 5 years ago, right? Even a year ago, it's totally different. So the whole hodler of last resort is you, me, and Francesco in the past. Now it's ETFs, it's pension funds, right? You have to remember when IBIT launched, they launched at like $25, right? It's traded up to 60 or something like that. Would we see a drawdown to $12? Like, I don't think so, because that money is even slower moving than a hodler, right? Like, they probably need months to decide to sell, not panic selling. We're going to sell tomorrow because it crashed. So the structural composition of the hodler is radically different today, and it will become even more radically different in the next year. So I think you have to factor that in when you're saying these things like, oh, it's just going to do the same thing as it did the last two cycles, because it's a very different world today. People are looking for bearish news, right? So now people are like, anytime there's a little bit of a downturn, like a dip, people search actively for reasons to be bearish. And I think it's just, I call it bear market trauma. They can't see the light, and they're just like looking for the darkness. They're trying to find the darkness anywhere they can find it. But I saw something today that someone tweeted out that last time inflation was high and there were tariffs, Bitcoin dropped a lot. So people can believe what they're going to believe, but Bitcoin will just do what it's going to do, and in time you see who is right and who is wrong. But I'm more bullish. I still think even after all of this stuff that's happened, people don't really know the limit, the absolute scarcity of 21 million coins, right? They just don't know. And all of these initiatives that are being put forth, they're trying to eat into this 21 million cap, of which maybe 4 million coins are lost, maybe 5, who knows? And a lot of it is in long-term cold storage, and a lot of it won't sell at any price. So what happens? Nobody knows. But something big will happen. I don't really believe in cycles, and I don't want to say the word super cycle, but I think whatever happens is not necessarily going to repeat. Bitcoin has grown to such a level that none of the previous cycles really can be mapped out to the level of adoption we have. Like, I have a model that I want to publish soon. It's going to be called Omega 60, but we don't use data from the first cycle, because I think it's just too raw and too immature. Like, there was no real market back then, right? So you could discount the first cycle, and then you have two cycles that kind of look alike, and that doesn't guarantee that the third or fourth or fifth, if there are cycles, resemble that too. So we'll see what happens, but the magnitude of adoption right now just doesn't seem to fit into the standard cycle. Like, the pace at which Bitcoin is being adopted is just so fast. Like you have like you said, we have the SPR after 2 months of the Trump administration coming in. That's like a rocket speed on political timelines, that they're moving this quickly, right? And I think David Sachs said the same thing. Like the government right now is moving at tech speed. And if the Bitcoin bill from Cynthia Lummis passes, then that unlocks even more capital allocation to Bitcoin. And then if they decide to do something like a Bitcoin bond in the US, that's even more. Like, how much Bitcoin is $200 billion at today's price? That's like 3 million something Bitcoin. So, and at the same time, Saylor is also trying to deploy another, 20 billion? I have lost track now. But
21, yes.
Yeah, another 21. And then you have other countries starting to deploy too. So what makes you think that we're going to repeat the cycle of the past where none of this has happened and have that drawdown? Maybe we do have a drawdown. So my prediction was this year or next year, we can go to 1 million. Maybe you have a 50% drawdown, right? From 1 million to 500K.
Yes.
Samson Mow makes a compelling comparison between the emergence of Bitcoin and other instances of hyperinflation, such as the demise of the Weimar mark in Germany. He notes that even solid assets like gold may become quite volatile and challenging to trade during economic downturns. Similar trends are now being seen in Bitcoin, which Mow says indicates that the devaluation of fiat money is accelerating. The U.S. national debt is currently above $36 trillion, and governments and central banks are finding it difficult to keep up with the growing debt. Mow contends that conventional remedies like reducing expenditures or changing interest rates are merely band-aid fixes, similar to using helium balloons to keep the Titanic afloat. He believes that switching to a Bitcoin-based monetary system, where assets are valued in BTC rather than quickly depreciating fiat currencies, is the only practical long-term solution. Now, let's dive back and hear what he has to say.
It feels like everything is coming to a head, that this change is coming very rapidly, and it's not a change that is really voluntary. If you look at Bitcoin from a nation state perspective, it is a necessity. So why was a major part of Trump's campaign about reducing the debt and fixing the spending? It's because it's gotten to the point where even normal people are realizing that it's getting broken, right? Like, you would think that it'd be realized at the few $1 trillion debt mark, but it's at 36.5 now, and that's when people are starting to kind of realize that the economy is breaking, things are getting more expensive, and it's really not going to get better. And I think even initiatives like the Department of Government Efficiency is not going to really make a difference. Trump wants to drop the 10-year rate on treasuries, and I don't even think that's going to make a difference. It's like you're inflating balloons, not like big heavy-duty industrial balloons, but party balloons, the ones that are like this big and they're helium filled under the Titanic as it's sinking, to kind of slow it down. Maybe you buy yourselves a few seconds, but it's still coming down. So yeah, I definitely think there's like a faction in the government that is fully aware that it is crashing down, and maybe the things like Department of Government Efficiency, cost cutting, and all these things are a way to kind of show that things are happening as they prepare the path to transition to Bitcoin, right? You have to show things are happening, but the real solution is to transition to Bitcoin, to rebase to Bitcoin as the underlying asset, and reprice everything to Bitcoin. That's the only way out of that $36 trillion of debt and economic woe. So yeah, it's a necessity. It's not it's not lip service, right? I think it is really the only way, and I think there are people that are aware of that. I don't know if you've seen the chart of the Weimar mark failing and volatility in relation to gold, but it was that chart that shows like the price of gold priced in marks, and it's like this, and then the volatility is like this, like thousands of percentages, right?
Yes.
We're getting to that point. You can kind of see it coming, that like it's almost impossible to trade this market. I've had a lot of traders ping me and say, well, you can't trade this. Like, it's impossible to trade this. Yeah, because when the currency is dying, you get this kind of volatility, and it is very hard to trade that. there is also the possibility that a lot of people will stay on 0%, but they'll have indirect exposure, like their pension fund will have bought Bitcoin, right? So whether you like it or not, Bitcoin is coming, and whether you accept it or not, it's still coming. Like, it's just going to be in everything you have, like if there are UST bills with Bitcoin in them, like the Bitbond, then, it's just everywhere. It's ubiquitous at that point. And it's not about whether you want to put 1% in or not. You just have 1% exposure. And there's already precedent with this. A number of pension funds around the world have Bitcoin exposure in some form or fashion. Like the largest Korean pension fund, I think, has a MicroStrategy. So it's not direct, it's MicroStrategy, but MicroStrategy has a lot of Bitcoin. Yeah. And this is just a trend that we're going to keep seeing. But it is that Overton window shift. It's becoming that Bitcoin is an acceptable thing to be talked about as a reserve asset, not just an investment vehicle, not something like a tech stock, but as a national reserve like gold. And I think that has a lot of market impact that has not yet been realized or felt. Well, the establishment of the strategic Bitcoin reserve in the US is a major inflection point, and I don't think people have fully understood the change, or they're questioning if it's enough with an executive order or if it needs a bill like the Lummis Bitcoin bill to pass Congress. But I think the main thing, which Adam Back pointed out, is that it's a big shift of the Overton window, if not destroying the Overton window, about what Bitcoin is and its role in the world. So with the establishment of the Bitcoin reserve in any form factor, I think it's a signal that Bitcoin is here to stay, absolutely. And it is going to become a key part of national treasuries and national strategies. Everything that a country does is going to have to incorporate Bitcoin in some way. I believe that we saw a shift already with the ETFs, which is BlackRock, effectively the largest asset manager on the planet, signaling that Bitcoin is a legitimate asset class. But the SBR is signaling that Bitcoin is a new form of reserve asset for major accumulation targets to be held as a strategic asset for countries.
As Samson Mow demonstrates, Bitcoin is becoming into a fundamental component of the global financial system and is no longer merely a speculative asset or a fringe concept. People may still have indirect exposure to Bitcoin through institutional portfolios, pension funds, or government-backed financial instruments, even if they decide not to own any themselves. Samson cites MicroStrategy as an example, whose Bitcoin holdings provide significant pension funds with indirect exposure without the funds themselves actually owning Bitcoin. This quiet incorporation foreshadows a much bigger change, one in which Bitcoin becomes an essential reserve asset rather than a contentious investment. He compares the current economic crisis to the Titanic sinking, arguing that attempting to slow the ship down with helium balloons is more effective than typical policy measures like rate modifications and cost-cutting. These temporary fixes are becoming outdated, as the U.S. debt has now surpassed $36 trillion. According to Mow, Bitcoin is becoming embedded in the financial and political fabric of the world. It's not just about opting in anymore. Bitcoin is coming, and it's going to be everywhere. So whether you're holding Bitcoin now or not, you may already be more exposed than you think. And in the world we're heading into, that exposure might be the difference between preserving your wealth or watching it disappear with the old system. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.